Hey, what's going on? Day Trade Knockout here. In case you noticed this, I'm going to make it obvious for you. No, it is not lipstick. Actually, what it is I just got done working a full-time shift for Amazon. Right now, I'm here going to do this analysis for you guys. So stay tuned. Plan to get you guys informed on how to prepare for this upcoming week. So, with that being said, let's get into the video. So right now, we're going to look at the weekly time frame chart first. So when you look at it, guys, you'll be able to see that there has been significant damage done to the market. We're gonna zoom in right here. So look what we got right here. We got a pretty bearish, almost a naked body candle. Naked body being a full-on naked body, guys, would basically mean if there is a bearish or bullish candle. Well, let's just go for the bearish since that's what we got. A bearish naked body candle basically means if we get a bearish close type of candle at the lows and there's minimum or low, no, really it's supposed to be no wick, but minimal wick kind of counts a little bit. It is good enough to be considered that. So we got a strong bearish body candle. And the reason that right now this could be potentially damaging for the bulls in the long term is because we're at the equal lows of where the nearest push up was. So if we get any price acceptance below, that could be showing significant damage on a longer time frame, especially if we get below here. But at the moment, if we get a lower high below here, then yeah, as you can see, that would be problems for the market. And currently, the trend is still alive. However, 509.83 right here is the line in the sand to make sure that if we don't get any, if we get price coming down here, that's one thing. But if we get a full-on lower high, that's another thing. Regardless, either way, you can see that there's significant damage under the markets at the moment. And another thing is, in terms of potential patterns, we do have the potential for a weekly head and shoulders with the neckline being 513.14. I put it right here, the head and shoulders. So this is the shoulder right here. This is the head. And then if we come down and do it again, this will be the neckline right here. So that's something to go look out for, guys. And on the nearest uptrend, we have made a full 100% retracement. So it's very bearish on this. So when you take it here from the low to the high, we're pretty much a 100% retracement all the way back. And in terms of that, when you look at the high volume nodes, you take it over here. So as you see right here, let's see here. 512 is where we're starting to build a volume right here. And in regards to that, we did close below it. So we're closing on the lows of that. That is another bearish thing to take consideration as we're closing below. It's really 513.90, 514 around there, but I just say 512. Regardless, this is high volume node right here, and we are below it at the moment. So that is another bearish indicator. And at the moment, when you look at the whole context as a picture, we can see that the bears are dominating at the moment. They're starting to step up, and they are showing more signs of significance. And then when we go down and look at a daily chart, we're getting an even greater downtrend at the moment. Equal high, and then we got lower high, and now we're making lower lows at the moment. And this is below the day time frame lower extreme that I mentioned. That level specifically was 512.99, so $513 basically around this level right here. And basically, when you look at it, also when we look at sorry guys, I'm a little bit tired right now, but when you look at the expected moves for next week, 520.93 is what I got. Oh, I don't even believe I charted it yet for you guys. My bad. Right here. So 520.93 is the positive expected move. So let me get that for you. And then 500. Okay, so 520.93 is the positive expected move. That is a. Let me see here. That's about an equal high pretty much at the moment. So that is somewhat neutral. And then the negative weekly expected move, that 500.77, that is very bearish. So overall, I would say that it is bearish. The weekly expected moves that we have on Thinkorswim that charts it out for us. We are, as I mentioned, we are in a currently pretty strong downtrend. And also, if this doesn't start to clean up, and I don't even mean necessarily that we start to look better for the Bulls, or I mean for the Bears, or yeah, if we don't start to look better for the Bulls, I just mean overall, because we are in a downtrend, but it's looking pretty choppy and pretty tight. If we don't get something more clear, like you see here, solid moves to the upside, we don't get the same thing to the downside. At the moment, this is starting to look somewhat like a descending triangle pattern, so that could potentially happen. So I'll be on the lookout for that. Possibly could chart trend lines like I did right here. I could pretty much get rid of these at the moment because it's not applicable anymore. And from a Fibonacci retracement recent, so from the highs to the lows right here, we are below the 38.2% retracement. So that's something to take note of. And then also from the lows to the highs, we pretty much have made a 100% retracement. I'll just chart it for you real quick. So right here, pretty much 100% retracement. Now, there you go with that. So the reason we're starting to show confidence is because we're starting to get price action below, and we had a strong close on the end of the week, basically. So that's something to take consideration of, and that you need to know of. And that is why I would say so. Now, if we get a 1 hour lower high below, man, that really does signify that. And I do believe we have gotten it, but we're going to check the hourly chart just to verify. But nevertheless, I'm just letting you know, guys, that yes, we are starting to show significant new signs of sellers. So be wary of that. And overall, right here. So at the moment, we're starting to get consolidation below. We haven't had a full-on 1 hour lower high, but nevertheless, still very bearish and something to take into consideration. And overall, if we remain below 512.99, the day time frame lower extreme, we're bearish. Anything in between 512.99 to 524.99, 524.91, uh, 524.61, we are neutral, and anything above 524.61 is bullish. And the reason I say this big gap is neutral is because it's pretty much a trading range right there. So take that into consideration. Now, I'm gonna go over the setups real quick, guys. So if we get the only bullish scenario that I do got on play is if we get a 15-minute high low above 514.66. Let me get that right. 514.26. My bad, guys. 514.26. Got that there for you. 514.26. That's pretty much where we start to get above all this choppy consolidation, where the stuff that happened on I believe it was Thursday, correct? Oh no, the Wednesday announcements, all that stuff that happened. Basically, that's pretty much we get above that. If we get a 15-minute higher low above that, that is decent. That is an okay entry, and that also goes in alignment with the potential look below and fail. So keep that in mind. As I always mention, trading ranges tend to fail. So until we get a 1 hour lower high, which we pretty much have, so if you continue down, then yeah, we got that. Especially since we had an attempt up. But if we do open above here and get a 15-minute higher low, then yes, that is showing signs of the Bulls doing better. Now, uh, look for a retest here. Look for any retest below here. And if we get a 15-minute lower high below 512.99, look for any bearish pattern, and we would target 511.38, and then 510.38 is the optimal target. And then lastly, bearish scenario number 2 is anything below 509.51, which is the lows right here. Basically, we would target it and look for a 15-minute lower high below this level, and we would target 507.50, and then 506.50 is the optimal target. And lastly, guys, we're going to be looking at the market internals. Oh, wrong one. My bad, guys. So overall, we're going to look at this, and everything pretty much during the week looked decently insignificant. Well, actually, that's not true. On the Wednesday session, we did get significant bear reads. And overall, it was an flowing type of week. And the reason that new money sellers are showing presence is because pretty much all indicators, 3 out of 3, are showing signs of significance for the bears to be taking place. So basically, right here. Look, on the Wednesday session when we had the announcement, right here we had all this. There wasn't any price action to go along with it, but on Friday, however, bears started to step up from a price action perspective, and look at all the reads that we got from the Volt, the dollar sign ADD, and the dollar sign tick. So all those are going in alignment to not have a bias necessarily, but just to take into consideration that there are new money sellers present, and there is higher probability for that to take place on the upcoming week. However, it's not a guarantee. You got to go along with what the data gives you. But I'm just saying, especially if we open inside of yesterday's range or below or anywhere near the lows of it, it is more likely. But if we open above and somewhere on the higher end, it is possible that a look below and fail is a possibility. However, regardless, just letting you know, go along with what the data says. But regardless, guys, like I said, this isn't lipstick. Stay in tuned for more. How do I be funny, guys? I'm trying my best here. I'm tired. Also, there's people here. I don't want people to think I'm looking like a dummy. But guys, I'm always happy to do this. Take care. Have a good weekend. And stay safe. Stay green on the week. And just trade smart. Bye, guys.